Welcome to TradeTheMBI.com. This is John. This report is for the 25th of October, and boy, isn't it getting exciting. You know, this is an interesting one because for me, added volatility actually becomes the golden goose. A lot of times where we get muck of just, consolidation or soft readings, when volatility increases with our indicators, it becomes an opportunity to just capitalize. So we had these ranges before, and well, we already knew we were in a short configuration from the breakdown that was happening, almost immediately after the little green pop-up. We knew it wasn't going to be sustainable and that we were likely to come back. And I had to put this one down here from, when we were talking about it from before, that was way back. This is a dip below the red line of the extreme, and we know those lows need to be retested, which was this low right down here. That happened a couple days ago. We popped back up from it, but wasn't sustainable. And again, anything below that 27.36 was a clear indication we were just going to keep going. And I kind of joked on the Skype chat that we might actually get to that 26.35 within the same day. But the reality is that we could see the shakeout was breaking down from that point. We already had the orange above. These were all telltale signs. There's no other way around it. It was pretty clean. NASDAQ likewise had separated quite earlier, even back, after the big up day and that. And then again, like I said, below that 50% on the NASDAQ. It was pretty clean. It became difficult for them to sustain the euro because when you have those kind of losses, they've got to sell quite a bit of things to cover it, and that created a nice little dip. A little bit of a rebound happening now, but it's probably not sustainable. There was never any dip below. This was mostly being held up by the central bank, just trying to keep things from going into chaos mode. And of course, this is that lead up to the election because as you've seen, polls keep changing. They're not sure which direction things are going, and that's added to the volatility because it's a reduction in the amount of supply. It's wouldn't necessarily call it selling, though the market's been in an elevated area. So there's uncertainty, and in uncertainty, people like to take money off, and that's why you get a flip back into treasuries. Because again, the yield has improved enough to where, hey, you can take some risk off. A redo of the oil retrace back to this dip below the red line, a positive sign because it's not going to press inflation, which everybody's always watching that because we've seen an artificial rise in interest rates for no particular reason, and it's creating some real borrowing issues overall, and that really pulls capital out of the economy. And so there's going to have to be some address to the budget concerns, and imagine that once the midterms are decided, if there's gridlock, could be very interesting because you may see shutdowns and that, and I think some of that's being factored into what's going on. Of course, safe haven of gold has returned as oil. We saw that transition, that inverse relationship, and so it's playing out. So this is how far you have to shrink the day because of how beautiful it was. And we were posting a lot of these beautiful setups that came in from clean buys that had higher secondary pivots. You can see a little P2 there, and then a variety of the shorts in some of these. Up at the 27, 40, 30 range, even higher than that from a couple of days earlier. But little buys, less afraid to buy in that secondary move that brings us up towards the pop. Ones that initially dip down, you get a pop reaction, but usually you look for those to get to the beautiful positive extremes, and they become little short opportunities again until you get that higher pivot, which that's kind of what we're in right now, which is sort of that consolidation after such a huge decline. But this cascade lower, it was beautiful from right up here at the 27 range, and it just, didn't even have to think about it as it was just cascading, nothing above the 23%. Dips below the red line, causing retraces coming through, and some nice bounce back rallies. This is one of those where, I look for any resets of the steel, in which case we got back over here. We ended up with an interesting one right before the real cascade started, where this one dipped below, gave a warning, but there was no orange support whatsoever, and it dipped below, and that made it much easier to stick with that. from the short side, and that produced a monumental move from the 27 to the 2650. It was just effortless, and you gotta love it when it's that easy. Expand this chart some more when you get closer into the action, and you can see where we're at right now. Moved into a nice little buy from that cutoff right down here. It literally happened right at the bottom of it, and we're getting the propelling a little bit higher, and you can see no dip below the red line, so that's much more positive action when you're testing that pre-market. But already in the pre-market, that's a significant amount of range this early. Geez, what time is it in the... It's 2 in the morning for the market time. Just turning midnight, not even midnight in the West Coast. So quite a significant move of 10 plus points we would think of as a pretty decent day, and this is happening in pre-market without any real activity whatsoever. So this is going to be an enormous, another day coming off what people refer to as carnage, but literally you're just getting a healthy dose of indecision, and pretty clean indecision in the sense that you're just having a lack of buyers, and that's just giving us a beautiful drain. So I think it's pretty consistent from trend moves. We look at like the daily MBI Opus, and that not fooled by this. There's nothing in here that's recognized by it as a buy configuration, and so it's pretty much sat out trying to take any longs within this configuration. But intraday, we certainly end up with a lot of unique configurations. You'll see the P3 there. That's a third higher pivot in the zone between the 0 to negative 7.5 as opposed to the ranges below. And all that's signaling is that you're getting higher and higher pivots, which means you're, in this case, -4 for the red DOC, and like I say, anything below, well, higher than the -7 usually is bullish in the general context. So we're really getting some nice range. People are getting terrified as we get close to that October crash date, and yeah, I don't really think you can call this a crash as much as just market correction, stabilization, a reflection of the uncertainty of what will happen in the election and how that will impact the economy going forward, whether there will be additional gridlock and or other political, variations, and that certainly weighs on the market. And remember, this is forward thinking, so this is the expectation for 6 months from now, after a new Congress is in place, and the bets that are taking place right now. I think it's all been pretty healthy, because you're not getting this. Remember, everyone was complaining about how we were getting a one-directional move, and everyone was lamenting they hadn't seen a correction of any kind, and then they get it, and the sky is falling. And so we're not going to worry about the sky falling. We're just going to keep going with the readings, and had some just beautiful signals. So we're going to continue to stick with it and keep calling them as they are. And I put in a beautiful description on the Skype chat, worth going through. Is rather long, but it talks about these relationships of the meeting places, and then these crossovers where, even in this late in a decline of 30 or so points, getting a secondary signal right here where it's like, okay, I've got a clear rejection of the long situation and no dip of my orange coming down. It's clean that that's going to continue to cascade, and even if you're taking it from 2677, which at that point you're already down, almost 20 some points, but you drop all the way down into the 50s, from that. So to take advantage of these kinds of opportunities, because they don't come all that often, and when they do, they're just huge opportunities to super expand. I know people get frightened when the added ranges come in, but it's the exact opposite thing you want to be. That's the crowd does that, and that's usually the wrong choice, and pays off not to get caught in sitting on the sidelines, because that, I think, sometimes can be more expensive than trading it. So just keep that one in mind as these ranges go. and just certainly you're going to have to recognize you have to be more flexible with stops. You can't be in a 2-point stop in this kind of volatility. We didn't even talk about that daily ATR. I don't think I have it listed here. I can actually pop it on real quick. Right there at the top. 55. Look at that from a daily ATR. And it all started right here, uptick. And we knew it beforehand from the DOC spread that began up at the peak. The break of the ABM signaled the rise in the volatility, and it just expanded from there. So no surprises, all pretty much well within general expectation of the signal. So just keep after it, and I will keep posting up interesting setups as they pop in. As always though, trade well. We'll talk to you later.